Iran's nuclear facilities are under attack threats. Crude oil has hit $98 a barrel, and a small oil stock has already jumped 300% in similar historical scenarios. March 2026 is seeing that same situation build up again. In today's video, I will tell you about 3 oil penny stocks. Before we go further, if you like penny stock analysis, please like this video. Subscribe to the channel. This kind of analysis comes every week. These 3 stocks are all under $5. Each one is better than the last. If you listen to all 3, your life could completely change in 8 months. So watch the video till the end and subscribe to the channel after liking the video. Let's start with number 3, the weakest of the 3, but still a solid play. This company is a South American story. In 2018 and 2019, this was at $8 to $10. Then political issues hit Colombia, oil prices fell, and the stock dropped to $2. But the company didn't shut down, went into survival mode, cut costs. Recoveries started in 2022, went from $2 to $6, then stabilized in the $4 to $5 range. What's unique here? They're working on carbon neutral goals, ESG compliant, trying to become future-proof. Not a traditional oil company, aiming to become a modern energy company. Now let me tell you the current situation. This stock is trading between $4 and $5. Market cap $1.5 billion. The company is Gran Tierra Energy, ticker GTE. Technical analysis shows an ascending triangle pattern forming. Breakout could happen above $5.20. Target $6.50 to $7. Volume is consistent. Needs a catalyst for big moves. Maybe quarterly earnings or an oil price spike could be that trigger. What's the 2026 outlook? They have an active share buyback program. The company is buying its own shares from the market. What does this mean? Management thinks the stock is undervalued. Using their own money for buybacks, that's a big signal. They don't pay dividends, but buybacks also increase shareholder value. If oil prices stay stable, potential is $6 to $7 in the next 12 to 18 months. There's political risk in Colombia, but the company has operated there for over 15 years. Local relationships are strong. Now the next stock, number 2. This one is even better for you. This is a pure Texas story. In 2021, this company was near bankruptcy. Too much debt, low oil prices. But management turned it around, sold assets to reduce debt. And in 2022, when oil rose, it went from $1 to $3.50. That's 250% return. Then in 2023, they made acquisitions. Increased acreage in the Permian Basin. Now they have over 50,000 acres in the world's most productive oil field. This company's mantra is simple, low-cost production. Even at $60 oil, they're profitable. Now at $98, imagine what their margins must be. Now for the current details. This stock is between $1.50 and $2.50. Market cap just $400 million, pure penny stock territory. This is Ring Energy, ticker REI. The chart pattern looks bullish. Higher highs and higher lows forming. Strong support at $2.20. Resistance at $2.80. The $3 level is important for a breakout. Insider buying has been seen in recent months. Management is putting their own money in. That's a good sign. What's their plan for 2026? They're drilling new wells, targeting 40% production growth. If oil stays above $90, cash flow could exceed $200 million. And here's an interesting angle. This company could be a takeover target. Big companies are acquiring in the Permian Basin. If a buyout happens, the stock could go at a premium, maybe $4 to $5 or even higher. The risk? This is a smaller company. Liquidity is somewhat lower. If oil crashes, this will be the first to get hit. Now the best one, number 1. This stock will be the most beneficial for you. This company does offshore oil exploration. Back in 2022, when the Russia-Ukraine war happened, crude oil went to $130. At that time, this company was at just $2, and within 6 months, it reached $8. That's 4 times return in just 180 days. They have projects in Ghana and the Gulf of Mexico. When oil prices spiked in 2022, their revenue doubled. Free cash flow turned positive, and the stock took off like a rocket. But then in 2023 and 2024, oil prices normalized, so the stock came back down to the $3 to $4 range. Now there's a chance history could repeat. Now the current situation. This stock is trading between $3.50 and $4.50. Market cap around $2 billion. This is Cosmos Energy, ticker KWES. Technical charts show support at $3.20, resistance at $5. If it breaks above 5, the next stop could be 6.50 to 7. Volume has increased in recent weeks. Institutional investors are showing interest. This is a good sign that smart money is coming in. So what's ahead for this company in 2026? They've made a major oil discovery in Mauritania. Production is starting from mid-2026. If Iran tensions continue and oil stays above $90, this company's revenue could jump 50 to 70%. Analyst estimates suggest this stock could go to $6 or $7 in the next 12 months. That's 50 to 75% upside from current price. The risk? Offshore drilling has cost overruns. Environmental regulations are strict, but the reward matches that risk. So to summarize, number 3 was Gran Tierra Energy at $4 to $5. Number 2 was Ring Energy at $150 to $250. And number 1, the best one, was Cosmos Energy at $350 to $450. If you like this analysis, please like the video. Subscribe so you don't miss these videos. Next video, I'll cover biotech penny stocks, including that 235% gainer. Hit the notification bell. Important disclaimer, I am not a financial advisor. This video is for educational and entertainment purposes only. In penny stocks, you can lose your entire capital. These stocks are volatile and risky. Only invest what you can afford to lose. Do your own research, consult a financial advisor. See you in the next video. Goodbye.